Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London coffee markets. New York coffee. I know that we have exited the possible February to late May original diamond pattern. And I know we initially broke on the downside, but then last week broke on the upside. And that, all in all, we have spent 2 and a bit weeks outside the pattern. And as yet, we've really not found a direction to go. But I'll ask you to bear with this possible lopsided diamond pattern, as for the moment at least, I can look at it as possibly false breaks both below and above. Additionally, I have drawn a second, flatter, but also lopsided and effectively larger January to date diamond pattern for the recent action, which also has seen breaches on the downside and the top side, but is still intact, and that's currently 179.40 to 186.40. So what can we say about the most recent action? Well, we have some pretty good supports below, but you would already know that from back in March. We have the following: the rising median moving average currently 181.20, the 2016 high at 179.55, the influential neckline currently at 175.15 of the January 2020 to April 2021 reverse head and shoulders bottom, and the congestion, quite a lot of congestion below, between 174 to 174.5, containing the August 2021 low at 174.5 and the 50% Fibonacci line of the May 2019 to February 2022 move at 174 even. As for the resistances above, they seem limited. We have the 2015 high at 187.40, then the interesting lesser Fibonacci line at 194.40, and the less so interesting one at 197.05, before we reach the combination of the November 2014 high at 201.35 and the 50% Fibonacci line of the February 2022 to January 2023 move at 201.70 that capped the year's rise. London coffee. The key pattern here, and as easily seen, and the one that's been running this market higher since mid-March, is the January to March bullish Andrews pitchfork. The market has been running around the middle time, currently at 26.51, and interestingly, we've not seen the action at the lower time, currently at 24.82, nor the upper time, currently at 28.21. Thus, the theory behind the Andrews pitchfork indicates this to have been a near perfect indicator of the bullish angle of attack. The most recent action has seen prices punch up through the June 2011 high at 26.41, the March 2011 high at 26.72, and even the limited March 2008 high at 27.04. Unfortunately, my charting system does not look at any further back on this commodity. Otherwise, I'd put them on as well. But last week was the highest we've seen prices in this contract for 15 years. So until something else crops up, the trend is your friend here, and the January to March bullish Andrews pitchfork is the key to the market's actions until it is broken. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.